It's a very controversial
yeah, it's very difficult to come in and nationalize or increase regulation on the one side when the commodity that you produce is traded in a free spot market. So on the one hand, you're fixing the cost base, and almost the only thing that miners can control these days is their cost base, because their revenues fluctuate. So you can't fix something on the one hand and let something fluctuate on the other hand, because you'll squeeze them out of business when times are bad.
Yeah. Let's take a look at our ability, or African governments, African countries' ability to actually manage this process and capability. I mean, the broad question is, while we might well want this and we might well deserve this moving forward, the question is, can we actually handle it in terms of capacity?
I think the resource investment area is hugely complicated. You've obviously got banks like RMB who are very involved in financing mining operations. You have large trading companies who will finance operations in return for getting the offtake, the commodity as a product. Governments have to play a part, and you've seen India and China increasingly use their governments to come in as a negotiating leverage tool. So you're seeing a lot more government-to-government involvement, I think. But ultimately, the resource belongs to the company and the people who develop that resource, the workers.
Let's take a look at future investment potential here, because some have suggested that there's a distinction to be made between current investments made in countries and then a new investment actually pouring in. What do you see this doing to investments and the direction of capital flow moving forward?
Well, I think certainly we've seen foreign investments from China and India, and that looks set to continue. I think Africa itself will start to develop more and more, and perhaps become an India in 5 years' time, and then we will see local investment coming in. We are certainly seeing, in terms of the markets, we're seeing funds and pension funds who are looking to take positions in commodities like something like copper, for instance, as an alternative currency. So you're seeing a lot of these commodities, these physical commodities, actually being stored, and with no intention of actually ever using them. They're being stored as a store of value. So I think more and more money is flowing into that investment space, and of course we now need to build warehouses to store these things, etc. So I think commodities is attracting investment as an asset class in its own right. But it's breaking that link between physical supply and demand. It's becoming very hard to figure out where prices go from here.